Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis video is for Monday, January 23rd through Friday, January 27th, 2012, and is sponsored by Realtick. All right, let's get right into the mix, folks. Markets again last week trended higher. This is something we've seen in the new year. The volume was unbelievably light again last week, averaging around 125 million shares on the SPY. The average last year was probably around 175 to 200, especially towards the end and middle of last year when it was even higher. This is unbelievable in terms of light volume. All right, now what does this tell us? Light volume means institutions aren't participating. That's all it means. All right, now many people don't understand that, but the basics are 90% of the volume every day is institutionally based. So if you see lighter volume, it means they're not participating. The little guy comes and goes. In general, I think what we're seeing here is the little guy has been putting money into the market in the new year, finally getting swayed by the hype in the media and on Wall Street that things are finally getting better. So they're putting their money to work. The institutions are gladly sitting back, letting the small person, the small investor, push the money in, pushing the markets up, and then ultimately we all know the downfall of this. The markets will eventually turn south. The question is when, though, right? I mean, if you're a swing trader like me, if you run, a company like In the Money Stocks and you're giving out analysis to thousands of people, the key is to pinpoint it. Because again, you could have shorted it at the beginning of the year and you'd be wrong. Yeah, will the markets eventually drop? Sure. But the key is to nail the top. And the way we see it right now, the markets are in a float mode on light volume. Now, eventually it's going to come to a close, but again, it's the pinpointing of that top to accumulate shorts that is the key. For those of you that are not In the Money Stocks members, if you want to join the elite, if you want to get proprietary analysis that even the hedge funds don't have, the money managers don't have, secrets that will blow your mind and make you millions, then you take the 7-day free trial here at InTheMoneyStocks.com to the Research Center. I repeat, that research center is what's generally for most people because it's geared towards swing traders and longer-term investors. If you're a day trader, if you want intraday analysis, then take the 7-day free trial to the intraday stock chat. All right, so again, going back to last week, we had a weak showing on Tuesday. Remember, Monday was closed for a holiday. Tuesday opens with a sharp gap up, and then the market fades all day long, closes near the lows of the day, barely positive. That was a great fake out for the rest of the week because every person was saying, oh man, we couldn't even hold the gains. This market's going down. Wrong. They caught everyone off guard. Light volume resumes on Wednesday, Thursday, and on Friday, and they just slowly float this market up on good economic news from China, on good economic news from the U.S., and positive things from Europe. All right, now again, Europe is still a mess. It's going to regurgitate and kind of stumble again, but it's all about timing. If you time this market right, you can make so much money on the downside, on the upside, and just doing down, up, shorts, long, short, long. And that's what we do here. My goal is to pinpoint the top for a pullback, then buy the pullback before we go back up, and then short the pop and go down again. And you can literally maximize profits to the tune of 100% a year in your portfolio. Money managers don't do that. In the Money Stocks does that. Members here do that. We have members that have absolutely made well over 100% in their portfolios a year based on our analysis and learning the methodology. So again, it's a free trial, 7-day free trial. I encourage you all to come here and try it. All right, now again, this is what we're seeing on the intraday chart. Notice how towards the end of Friday, originally we started lower on Google earnings, but Microsoft, Intel, IBM all had good earnings. That essentially negated Google's effect. The markets on light volume then were able to float back up towards the end of the day. We ended right at the double top from Thursday here, which again is right around the 130-160 level. So 130-160, nice pivot top there. If we get through that, we're going to head to a key level. I'm going to show it to you now on the daily chart. Where are we going to go if we get through this level on Monday or Tuesday of this coming week? The answer is right here. Gap window, gap fill. This is the overall target of this market, in my opinion, and you're looking for a move to the 132.70 to 133.35 level. So there's about a 60-cent variance right there. That's going to be the target of this market. Okay, and again, I called the breakout towards the end of last year. I said this market's going to break to the upside. We did, and I've been bullish ever since, and this market has just continued to pile on and go higher on light volume. So the calls continue to be nailed. The profits are in the pockets here and continuing to be accumulated because we were long this market, small caps, mid caps, and again, talking about the market continuing to grind higher. It will come to a close soon, very early, as possibly even as early as next week. We will see a little bit of a pullback. Our analysis is showing it will be only a pullback, not a big drop, maybe 4 or 5% max. And then once we see that, the market should make one more attempt to go higher before a bigger rollover. And again, if you want these exact pivot days, these exact cycle days, you take the free trial. You join us here at InTheMoneyStocks.com. All right, so that's the SPY chart. That's the analysis for the weekend. Let's take a look at a couple other charts. What are we seeing out there on charts like JP Morgan? Now, this is the key on JPM. And again, you can see this pivot top. This is where you're headed on JP Morgan. So you're getting very, very close to significant resistance. In addition, you also have this level. There's a chance we go up here if the markets can continue to inch higher. And again, this first level of resistance is going to be hit at 37.65. And if you get through that, you're looking at 38.60 would be your final pivot top. I do not think JPM gets through 38.60 without a very, very solid pullback. All right, and I think that should coincide with the markets. In addition, Goldman Sachs, if it continues to have very good moves here, we may see Goldman grind up into this 200, which is also a beautiful pivot top right here. And again, right now you're trading at 108.74. This area right here is right around the 117, 118 level. So I mean, there's another possible, $9-8 left in Goldman. I wouldn't be buying it here, obviously. The buy was when I called it out last week to our members, and we talked about bullish consolidation. Although, again, it's tough to buy it into earnings, but nonetheless, the bullish consolidation told the truth. 2 moving averages of support below. That's a beautiful trade setup for the upside, and sure enough, off to the races it goes this past week. Taking a look at Apple Computer. Apple down $7.50 on Friday. Beautiful pullback. I love it how it took out the highs. This is something they do all the time, guys. I want to make this clear. The games that are played with institutions, especially around Options X, are, if you don't know them, you're missing out and you're going to lose money. It's just that simple. So you must learn these games. Bottom line is, you had a beautiful double top right here and a pullback. The markets went higher. You closed above the high. But In the Money Stocks members know there was no confirmation. It's the In the Money Stocks confirmation signal, a proprietary analysis technique that we have discovered here that we use. And sure enough, members knew no confirmation there. Therefore, look for a pullback, especially into Options X, right to gap fill right there. Perfect gap fill. And that's where Apple closes. So, again, Options X games closing right around the 420 strike price. A lot of times what you'll see, folks, is major stocks into Options X will close around a major level. Like Apple closed right around the 420 level. Why? Because the strike price for a majority of puts and calls was 420. So the institutions bank a crap load of money. I mean, it's just that simple. In addition, you look at Amazon.com. Where does it close? It closes right around the 190 level. Just a little bit above 190. Guess what? Major strike price on Amazon, 190. All right, I mean, you just look at these stocks and that's what you find out. I mean, you realize this stuff, folks, and that's why they do it. Because, again, remember, who's selling the majority of options? The institutions. So they're getting a premium. They have a vested interest in making sure those things expire worthless, right? Because then they maximize their profit by taking the whole premium. They don't lose anything. So they'll drive stocks to those strike prices where they make the most money, and that's exactly what you see on stocks like Apple. Absolutely. Now, Apple earnings coming up this week. It's going to be fun. We're going to be having a ball in the intraday stock chat, making money on scalp trades, on swing trades, and in the research center, the analysis, the proprietary analysis that we're going to teach. We're going to give you swing trades this coming week. Be ready. We already gave out some late last week. You can get in on board if you take the 7-day free trial today. And again, the moves are there. The profits are there to be had. If you're willing to learn and stop following the nonsense on Wall Street, the hype in the media like CNBC, which is nonsense. All they do is hype the people up, the average person up, and get them on the wrong side of the market. When bullishness gets to a height on CNBC, that's when you should be going the opposite way and shorting, and vice versa. When everyone's jumping out of windows on CNBC, that's when you go the opposite way and start buying. Very simple, but the average person doesn't know that, and that's why they lose money. It's like a transfer of wealth, folks. I mean, that's what the market is. It's a transfer of wealth from the little guy to the institution. The key is, as a little guy, the opportunity to get past that and start making money is there. You have to step up, though. Most average people, they don't know any better, or they're just ignorant and they're not willing to change, so they lose money. You don't have to be like that. All right? That's why we're teaching people the right way, the smart way, the way to profit for life. All right, enough said here. Come join us here at InTheMoneyStocks.com. Again, that's InTheMoneyStocks.com. Take the 7-day free trial. You try us out, you don't like us, you don't stay. That's as simple as it is, folks. I mean, we're giving it out for free for 1 week. You make money that week, which most people do. They make enough to pay for multiple years of the research center or the chat room. Then you stick around. You enjoy and you make millions for the rest of your life. Very simple. Have a great evening, guys. Again, enjoy your weekend. Join us here at InTheMoneyStocks.com.